How to buy gold stock. It is not an unknown fact that gold is rare and precious if we talk gold as an investment. Whatever the state of the economy is, gold is always there to diversify your assets. When we think about investment in gold, you are not restricted as an investor to just invest in buying physical gold such as coins or bullion. You have many other options too, including buying shares of gold mining companies, gold exchange traded funds or ETFs. You have an option to invest in gold by trading options and futures contracts too. In this article, we are going to understand everything about gold investment including risk and rewards. Let's begin. History. Gold as a currency. Gold was used as a currency way more back than almost any other matter. Many cultures appreciated gold as a currency, which then resulted in the establishment of the gold standard named de facto world currency, established in the 19th century. Risks and rewards of gold investment. Why gold is a good investment. Gold is usually purchased as a hedge to cope with various forms of market risk, so gold can offer some protection against bad performance in various markets. Inflation and currency fluctuations. Its price of gold is dependent on supply and demand and not on currency valuations or market declines. One can add gold to a well-diversified investment portfolio, as financial diversification can be achieved by holding different kinds of assets such as stocks, bonds, real estate, precious metals, and various commodities. It is crucial when diversifying that hold those asset classes that are uncorrelated. What is that? The asset classes whose prices do not move together are called uncorrelated, as gold has a low correlation with the US stock market, emerging markets, and high-yield bonds. Traditionally, it makes gold to have an excellent diversification potential. Gold is a hedge against inflation. The gold price tends to increase with the rate of inflation. It's because when the inflation increases, investors increases the price of gold by purchasing it as an alternative to cash. Why gold can be a bad investment. Many investors believe that it's just a mere fallacy, that gold is a very safe investment and the best hedge against inflation. Some investment researchers have observed and concluded that the gold demand doesn't rise whenever the stocks decline or when currencies lose value, but they believe that its demand rises simply because scared investors rush to buy it as they expect its prices to rise generally. If that is the case, then, according to many, gold is not a safe investment. Also, its track record has shown that gold has performed well in times of severe inflation or market decline occasionally only. Gold also doesn't provide the guaranteed returns that many other well-known securities do. How to invest in gold stocks. There are generally three main ways to buy gold stocks. Buy the stock in gold mining companies directly. Buy gold exchange traded funds, or buy gold mutual funds. There may be different pros and cons to each of the methods above, such as when you buy mining companies stock, it allows for direct, high risk, and exposure to gold mining, and mutual funds and ETFs both offer lower risk and better diversification too. 1. Gold mining company stock. It is the most direct way to invest in a gold stock. This method is both the highest risk one and the highest reward too. When investing in a mining company, it means you are expecting and placing a bet that the company will be profitable. When you select a gold mining stock, few things are necessary to be looked at, such as look at production costs. Gold producers often have little buying power, so being capable of producing gold at a low price is an important advantage. One can get this data given on the website of the mining company just by simply clicking on the Investor Relations option, and then look at the report of the annual or quarterly earnings. Look at production. It's a sign of a strong company if it's able to increase its production annually. Higher revenues and lower costs. One can get that indication of its growth by seeing the company's annual report. Look at the company's valuation. The valuation of company info can be found on websites such as Morningstar.com, Newmont Corporation or NEM, Barrick Gold Corporation or Gold, Franco-Nevada Corporation or FNV. 2. Investing in gold mutual funds. If you take a lower risk option more into consideration and not sure about an outstanding company, then you may decide a gold-oriented mutual fund as an investment. These funds keep portfolios of those companies that mine, process, and distribute gold. What is active management? It means you can let a professional select what they consider to be the most reputable and strong companies in the industry. Be aware of the fact that there are fees associated with purchasing mutual funds. 3. Invest in gold-oriented exchange-traded funds or ETFs. ETFs are similar to mutual funds. They offer the investor access to a wide range of stocks and bonds at a reasonable price. Gold ETFs usually have lower fees than mutual funds because there is no active manager. Instead, they track an index passively. When you purchase ETF, you indirectly own gold. ETFs may be a good choice if you want better flexibility and lower fees. In an ETF, you not just invest in gold itself, but you invest in gold mining operations. Downside includes lack of an active manager, which results in less chance of outperforming the relevant index. 4. Purchase gold stocks. After deciding your method of investment in gold stocks, it can now simply be executed through an online broker such as TD Ameritrade or E-Trade. You can find a non-virtual broker to open an account, locate for the ticker symbol either you want to choose the stock or ETF. To make a purchase, enter by order with your brokerage. Enter in the ticker of stock, ETF or mutual fund you want. Enter the number of shares you want, and then submit the order. Conclusion: no argument. Any kind or shape of investment consists of risks, including gold, but as global financial markets have experienced high volatility and multiple crises recently, gold has got a considerable increase in popularity. But many investors may remain uncertain, thinking why gold would be a good investment and a good way to purchase the asset. That's all for today. Are you planning to invest in gold? Share it in the comment section. Please like and subscribe for more videos.